markets are oversold by looking at simple indicators in the very near term. I think, RSI, etc., for example, is at about 16 or so. So it does look like it's getting a bit overdone in the very near term. But let me just tell you what's happened, right? There's a confluence of events which have come together in today's session. And I'll just quickly run you through all of them. The first one hit global markets on Wednesday, but we were saved yesterday since we were closed on the account of 2nd of October holiday. I'm talking about Iran-Israel. Global markets have... while global markets in the past, over the last 2-3 years, have rallied on despite conflicts around the world like Russia, Ukraine, and episodic flare-ups in the Middle East, many are wondering if this will see a bigger impact now. Second, perhaps, is a short-term phenomenon, and this is the shock China rally, driving almost FOMO-led inflows into that market, and perhaps being funded by big outperformers like India. So money out of India, at least in the very near term, markets like India into what is going up and up, that is China. Number 3, we're also looking at the second quarter corporate earnings season perhaps being a little subdued. Remember, Q1 was also weak, but it was explained away by companies and analysts alike by saying, well, there were elections, there were heat waves, etc., etc. Remember, we just got the pre-quarterly update from Dabur, and it was a bit of a shock surprise on the negative side. Lastly, SEBI's F&O curbs, which were, while widely anticipated and advertised, and they were in line with what was proposed in the month of July, they're ultimately at the margin, and markets move on incremental news flow, positive or negative. They are going to be negative for market volumes down the line when they come into effect. So just to summarize what we've done on the markets from the highs, from the recent highs, and the highs are different for the Nifty, Bank Nifty, mid and small cap indices in terms of dates, but from the highs, the Nifty is down about 4%, the Bank Nifty is down almost 5%, the mid cap index is down about 3%, and the small cap index is down about 3.5% as well. I also looked at banks and non-banks in the Nifty and how they've done from their respective highs. These are the top losers. Axis is down 8%, HDFC Bank is down 5.5%, and ICICI Bank is down 5.5%. Remember, bank stocks, according to many, were just starting their move higher, and well, this is what's happened. Non-banks in the Nifty, top loser from the highs is Reliance, which has lost almost about 8%. And then you've got these auto names, Tata Motors, Bajaj, Maruti, which have lost between 6 and 7%. There is also a L&T, which is down about 6% or so. Small caps, and what they've done from their recent peak. So small cap index made a peak before the Nifty or the Bank Nifty did. Sterling Wilson Solar, top loser there, 20% cut. Tita got down 18%, Data Patterns and Raymond, some of the other stocks. So you just get a sense of, the damage which we've seen, names like Zensar, Tejas Network and Natco, some of the others. So anything between 13 and 20% so far, depending on what happens next. I just want to wrap this up with some of the very, very near-term triggers, right? And this may determine what happens from here. Geopolitics is one, of course. That is actually number one. That will be the dominant driver. Israeli retaliation, especially, one of the main channels through which these conflicts impact markets is through energy markets. And there are reports which suggest that, well, there could be strikes on Iranian oil facilities. If that happens, there could be a flare-up in oil prices. US data tomorrow will be important. We get the non-farm payrolls number, the jobs data, monthly one, right before markets open tomorrow. And that will give us a sense, weak or strong, whether the Fed is actually ahead of the curve or behind the curve. Remember, they cut 50 basis points last. With respect to China, what's gotten markets really excited is fiscal measures, right? But it's still in the realm of news reports, and this will happen, that will happen. We don't have official confirmation. And I think it'll be key to watch when China comes back from holidays, whether they actually walk the talk. And lastly, we kick off the festive season with Navratri, and demand trends will be very, very keenly watched. As I said earlier, Q2 is expected to be weak, and markets are looking ahead at H2 of FY25 for earnings to start to pick up. So some things in the very near term which perhaps determine where we go from here.